And everybody, it's Tim Reazor with Revere Asset Management just before 3:20 here on a Wednesday night, April 13th, Wednesday night, the Wednesday before Easter of 2022. So listen, I've got something I want to share with you. It's called a half back retrace. So HBR, and when it hits this level, things tend to bounce because it's the way markets normally move. And I want to show you that on the indices. So you don't get caught off sides, right? And so I want to look at that, and I didn't want to bury the lead. I want to start off with that as soon as we get to the market coverage. But listen, if you have any questions, concerns, if you ever take umbrage with anything that I'm saying, you can just scroll down here, right? If you're on your connected device, you just hit the button right there and you call the complaint line, or as we call it, you call Danny. That number links you directly to America's Fiduciary, Danny's store right there. Want to talk to me right here? I am at TJ Reazor, tim@revereasset.com, with the fellows making all the decisions in the portfolios, Don and Hunter, what goes on the watch list, what buys they do, what sells they do, it's all right there. The portfolios that they run can be found right here, the core portfolios, or you just click hybrid and you can see the other two portfolios. And if you want to discuss it with them, what makes Revere Asset different than every other strip mall advisor next to the vape shop is that you have access to all the strategy. It's not plausible deniability. It's not mutual fund picking. It's not the gross overuse of the same stocks in different mutual funds. It's genuine strategy that you have access to. Whether you're a client or not, you can email or call and talk to any one of us, and we'll talk to you as long as you want, as much as you want, to help you get, help you find the success that you want. And then stock nerds, market lovers, these videos there for what? Your edification purposes only. They're never ever to be misconstrued as advice. When advice needs advice, seek advice, all you have to do is give us a call. And then you get the contact button right here. You just submit the old form RU, right? If you're like, hey, I don't need to call, I just need to send you a quick message, do that as well. If you want to find the podcast from this week, let me tell you something. I enjoyed it a lot. I don't know if it was our best episode. I think our best episode was 2 weeks ago, but this one I thoroughly enjoyed. If you haven't watched it yet, I encourage you to do so. And then if all those contact things don't work for you and you just want to be texting buddies with me on Twitter, at TJ Reazor is how you find me. And then my DMs, I've left my DMs open, so you can feel free to just get on your Twitter profile, shoot me a direct message or a text message, and I will get back to you. Look at these, it's quicker than email for me. I'm not going to lie to you about that. So real quick, let me show you this chart here. So look, nothing's happening. Nothing good happens typically below the weekly 21 on SPX. And that's where we're at right now. Okay, we're at the weekly 21 on SPX. So typically nothing good happens below the weekly 21 of SPX. It serves as resistance. We need to pop above that. So let me just say that first. Secondly, today was a great day in the markets, right? Like, it's a great day in the markets, up 1%. Well, Tim, how do you know they're up 1% right here? NASDAQ, you're like, Tim, the NASDAQ really outperformed, up almost 2% today, 1.196% today. But let me show you on a 5-minute chart why that was allowed to happen. And I say allowed to happen because it's the algorithms, right? It's the algorithms that control the markets. It's not you and me. And there is big money, big institutional money that controls markets. But the dollar just came off ever so slightly, 0.4%. That's it. And it allowed the markets to flourish today. And you're like, what do you mean, Tim? The markets were allowed to flourish. Well, right now, the algorithms are programmed to buy equities when the dollar comes down. And there's a bunch of reasons we could talk about that. And we've touched on them in the podcast. The podcasts are where we go in depth these economic issues, why they're happening, and what's happening. Not only what's happening, but why they're happening. Here, we get you to the red meat right away, or the shiitake mushroom if you happen to partake more vegetables. Now listen. So 8:30 Central, right, is when markets open. Okay, so 8:30, and what happens here? Yeah, the dollar just comes off dramatically, and that's dramatic on a 5-minute chart. You're like, Tim, it was only 0.4%. I get it, but for the dollar, that's a big move. SPY, what does SPY do at 8:30? Well, let's take a look. There's 8:30 right here, lower left to upper right, and so the relationship is what? Yeah, dollar that trades sideways to lower allows life, CPR, to be performed on stocks. And that's what you have to understand right now. And well, Tim, where's the dollar at on your ATR charts? You know, the charts that show you a true way to look at something that's overbought or oversold, not just conjecture. We didn't even get to 3 ATR on the Dixie. We did once over here on 3-4, but we haven't even gotten there. We started this little bit of a pullback. I don't know if this is where it stops. And I will tell you that if the dollar were to resurge, that market's probably come off again. Can it be that simple? It's never that simple. But I try to present complex issues in the most understandable, digestible, simplistic form possible, knowing that if you want to go deep, on the topic, we've already discussed it. Well, where did you discuss it? On the podcast. We get into these issues in the podcast. And then if you're like, well, I didn't hear that podcast, what I'm telling you is that you call or we make ourselves available. Either way, we are absolutely positively here to help. Now, as I muted there so I could cough and not cough on you, where does that leave everything? Where does that leave us? So let me show you something that's super interesting to me. I'm going to put SPY up here on the chart again. I'm going to do this on a daily, right? And it's a little hard to glean here on a, well, it's not so hard to glean. I think it's a little bit clearer on a 3-day. Let me come to the 3-day. So when I'm looking here at the 3-day chart, you can see that, you know, right in the vicinity, this is a little fib work here, right in the vicinity of the high and the recent low. What did the market do? It came back and gave you a half back retrace. That level right there says 50%. It's a big deal because I'm telling you, I've done the work on this. Markets typically retrace 50% of their moves, and they can do it on a week. They can do it on any time frame. But it's important that you understand that. And whether it's a 5-minute, daily, 3-day, they typically give you back. So you had this move off the bottom, and it's giving you this 50% retracement. That's normal. Okay, that's normal. And so can it go further? So let's go back to just this daily. And so, yeah, it can come back up to 21. In a matter of fact, I don't know who's going to go short. Tomorrow's the last trading day of the week, by the way. Speaking of which, we'll have the podcast for you early. We'll have it done tomorrow afternoon. But I think it helps to look at the SPY a little bit differently when we go to the ATR charts, not just on the charts with my 8, 21, 34, 50, 200-day simple moving averages or exponential and simple moving averages. I think it helps to look in the context like this. The mean, 1, 2, and 3, minus 1, 2, and 3. So look at this, 50% retracement, and it's just a zone, right? You came down to the -1 ATR, and that's kind of makes sense to me. Like we're even back here in where you came back at the beginning of the month in March down to this -2 ATR. Normally, when I say normal, when you're not in downtrends, the -1 ATR holds, and right here. I'm not bullish on the markets. I want to be really clear. I'm not super bullish on the markets, but they're trading in a violent fashion, in a vicious fashion, that it makes sense that they came down to the -1 ATR and held. Can they get back to the daily mean, which is right here, and then just confuse everybody, a cliffhanger, if you would, going into the long 3-day weekend. By the way, it's a 4-day weekend in Europe. Markets are closed on Monday, I believe, in Europe. And so you'll get potentially, I'm not sure about Asia, but so potentially just Asia trading on Monday and the United States markets trading on Monday. So that kind of makes sense to me. But to come down to this -1 ATR, it's hard to want to lean hard in one direction. Do I think all the things you think about with inflation and the CPI reports that have come out the last 2 days? Yes, and you can hear my thoughts on exactly all of this on the podcast, and I encourage you to do so. Don't let these videos be your only source. Use our podcast, please. It's the foundation to which we do these videos upon. And you'll hear long-form thoughts from Don, long-form thoughts from Danny, and long-form thoughts from Hunter. I think it's really important that you do. tune into the podcast. But let's look at the NASDAQ here. So here's the NASDAQ, and NASDAQ in the zone, look, there's that 50% retracement level, right? From recent high to recent low, half back retrace. Do you want to go back up? Does it want to go back up to this daily mean? I think that makes sense to me, right? Do I think it's going to fall off a cliff? Like, I can see what you would say, like, who wants to go long into the weekend? Anything can happen with geopolitics, sentiment of the market. It's super interesting that this is where this 50% retracement is where a little bit of a stand has been made. I don't know how much further you go from here, but if you come right up here, I mean, 40, we'll just call this level 44, 20 more points, right? 4480, 4500. What if you go to 4500? Well, then that puts you, right above the weekly mean. That kind of makes sense for Friday, or I mean for Thursday, the last trading day of the week. Leave them with a cliffhanger. And so it doesn't have to work out that way. So, and we could talk this ad nauseum, right? But it's going to really be dependent upon what the dollar does. And it's the same deal, by the way, with the Dow and with the Russell, showing you the half back retrace and all that. So, but what I think is absolutely positively helpful here is actually looking at some stocks. And so let's do this. This is a weekly, so this is a weekly moving average stack with, this is a moving average stack with 2% yields, okay? So moving average stack with 2% yields. And some of these are extended, and let's take a gander here. And some of these aren't working out right now. Well, you can see it's a moving average stack, but it's down today. So AbbVie down, they had the dividend payout today. But, with inflation the way it is, the dividend paying stocks are the ones that are typically in vogue, and you'll see by the list what types of stocks those typically are. And what I want to stress here to you is that your best place to buy is, look, and that's an opinion of mine. I think the best place to buy is the least risk is at the 21. Why is that the least risky place to buy? Because if it's going to fail there, it's probably going down to the 50, and you can choose to get out, right? And let it figure out what it wants to do if the direction is not clear. An aggressive buy would be a buy at the 8, right? That's the dotted line here. This is a 5. An aggressive buy would be the 8 right there. And so I think that the 21 is vital. And like last week, one of the stocks on the list last week was on the watch list that I gave you was, let's see here, CCJ. And so CCJ on April 6th is right here at the 21, and then look at what happens. And so, like, well, Tim, all those things moved up. Yeah, but they were showing up on my scans too. Like Pfizer showed up on my scans, like here's the 21, but look, it's just right back to the 21. That was on the watch list from last week. So I'm not a fan of buying extended, especially in this market. I don't think you want to buy extended. You get your hands whacked, right? Why do that? Why take that risk? It's unnecessary. You can buy at the mean, whether the mean for you is a weekly 21 or a daily 21. Like, this is a great looking chart, by the way. But can you buy it at the 8? It's not giving you many opportunities at the 21. So maybe you wait, right? Here's Aflac at the 21, AIG at the 21, Amgen at the 8. I mean, it's great. That's a beautiful looking chart. And you're like, well, Tim, I really like Amgen and I really like that ADM chart. Well, then let's start working smaller time frames. The 4-hour 21, just understand that when you take a chart in the smaller time frame, you can sneak into it, but be ready to act quickly. Well, that's a good looking chart in it. Okay, so let's go back to the daily. And by the way, remember, stock nerds, these videos are for edification. They're never ever to be misconstrued advice. If you want advice, need advice, or seek advice, all you have to do is, in fact, give us a call. So let's keep running through some of these stocks together. So here's AstraZeneca. We've seen better, right? Bristol-Myers. It's aggressive. BP looks extended, right? Moving averages aren't quite stacked. ConAgra, way extended. Cardinal Health, yeah, that's extended. And what do I mean by extended? Let's take it to the 3 ATR with Cardinal Health. There's the 3rd ATR. It doesn't have to pull back. It can consolidate up here, but where do I think you get your best risk reward? I think you get best risk reward around the 21. Caterpillar, Well, look at that. Well, why would that catch my attention? Oh, 21. Let's take a look here at Caterpillar. Oh, I think we got ourselves a chart there, Ed. We're going to write down. Caterpillar. Okay, so here we go. Kemmers. I like that Caterpillar. Oh, what is that? COP. COP. Writing down COP. CPB. Campbell Soup. By the way, take a look at what's leading here. CVX. Not a bad looking chart, just not at the 21. The 8 Dow. Yesterday's at the 21. EOG. Well, that's a good looking chart, even though it's at the 8. I'll write that down. But CAT to me, you see, and you don't have to like make a definitive statement. Well, that one's better than the other. Like, is it near the 21? These are all screened. GD, GS, GlaxoSmithKline, Extended, Hartford. So you got insurances, consumer packaged goods like Campbell Soup. There's HP, a lot of energies in there. Hormel, look at that. Yeah, they want spam in this market. HSBC, no thank you. J&J, boy, stellar balance sheet. And at the 8 at support, maybe it doesn't give you the 21. Kraft Heinz, even Kraft Heinz is extended. Kinder Morgan, boy, that's a chart. They're going to report earnings soon. Well, Tim, how do you know that? Well, it's just right down here. Going to do it on 420, Elon's day. That's when Tesla reports. KO, whoo, they want some sugar water. LMT, let's see here, Medtronic. See, well, what's the difference between this Medtronic chart, kind of at the 21, isn't it, Tim? Yeah, but I don't like this. I don't like the 5 trying to cross below the 8. That's what's different to me about that chart. MET, boy. See, now look here, subtle difference, right? The 5 is still above the 8 at the 21. I'd write that down. Yeah, let's put, I'm putting a note right in my journal. Marlboro and Extended MPC. That's a good looking chart. It's just, are there better risk reward charts than Marathon? Yeah, perhaps it was ConocoPhillips, right? And you're like, well, Tim, show me that ConocoPhillips chart. It's right here. So go back up to COP. That to me is a little bit better looking chart than MPC. Well, MPC is a little bit higher, yeah, but you're at the 21, and 21 is oftentimes the initiation of bounces. And if it doesn't work here, you tend to get cap downs. Merck. Go back to the 8. That is support. Newmont Extended. PAA. Extend, boy, you're starting to get that moving average separation. 5, 8, 21. See this consolidation at the 21? That is a thing of beauty. PBRB, ASAP, goes Petrobras, PepsiCo. The list is off the screen. Oh, there's Pfizer. So let's come down here. Pfizer, just a few more to go here, folks. Procter Gamble, PSX. See now, no. COP was better, right, than PSX chart-wise. It's not my opinion. It's just the charts telling you that. PXD, RTX. Oh, it's a good looking chart, right? Southern Company, but it's not at the 21. And I've been talking about the 21 here. So it's a nice looking chart on the 4 hour or the 195. Let's do 78. See, there's nothing wrong with that. They're bullish for sure, right? Let's come back here to SYY. Off the 8, off the 21, a little extended. No, Vail. See, the 5 is below the 8. We've seen better merchandise. Not bad, but we've seen better merchandise. The yellow chart's nice, isn't it? I just wish it was back at the 21. That's a good looking chart. That's a bullish chart. VOD, Williams, we've seen a little bit better for us in the terms of the setup we're looking in ExxonMobil. And so it's a good looking chart of ExxonMobil, by the way. And so what's the deal here? Why are some charts good looking charts, but you're like not writing them down in your journal? Look, they're bullish charts, right? Like if we go to that, let's go to that VLO chart. That's a great looking chart, right? But and that it sure does look like it wants to go higher, like it wants more. That's a really good looking chart. And it probably does get more, but just understand that you're trading at the 8, and there's always an opportunity for these things to pull back to the 21. So you just want to take that into account. And it doesn't mean you can't initiate here. It just, for me, I think you get better risk reward around the mean. Speaking of the mean, just one more time, talking about it with you. The weekly here. The weekly mean is, we're just near 4,500, okay? Boy, does that make sense. Will the market go up 40, 50 points tomorrow? Close in the vicinity of the resistance level, or, and let me see if I can zoom. Yeah, like right here. Oh, the resistance level 44.75ish. Will it get in striking distance to just throw everybody, wondering what's going to happen to follow the trading week? That is what makes absolute sense to me. So I hope it helps, and I will see you at the next update.